Hi, everybody. Jeff Yastine here. Welcome back to another edition of Wealth Press TV. And as always, make sure to like and subscribe to us. Follow us on social media. So my guest this week is Adam Sarhan of Alpha Trades. Adam, welcome.
Thank you.
Let's talk about Tesla and EVs, electric vehicles. And I might as well start off by asking the sort of elephant in the room question, which is, as we watch Tesla move higher and higher, is it too late to buy the stock? Is it too late to buy Tesla?
That's a really good question, Jeff. I think that it all depends on your time frame. If you're a short-term day trader, then yeah, it's too late. It's very extended. I mean, the stock was at 400, now it's at 600, and 400 just a few weeks ago. That is, not years ago. So you typically don't want to buy after a big move up. This is a new uptrend. The stock has been rallying hard for the last 12 months or so, since the end of last year, since the end of 19. And you've been in this super, I guess, concentrated environment where you're getting a lot of buying for two main reasons. One is that obviously Tesla is an EV stock, right? It's an electric vehicle. It's the future. They've been able to get through all of their bottlenecks, if you will, or iron out all their kinks with respect to production, with respect to cash flow, with respect to, battery issues, so on and so forth. We know the company's been around for over a decade, and you've heard of all these different obstacles that they've faced over that time. The good news for the bulls is that they've been able to crush it and continue to innovate and excel and over deliver as they under promise. So you're in a situation right now where Tesla itself is acting very, very well. In the short term, it's extended. It's due to pull back, but it's being added to the S&P 500 right now. Now, usually when stocks are being added to a big index like the S&P 500 or the Dow or the Nasdaq, whatever the case may be, or the Nasdaq 100, mind you, whatever, it's not the end of the world. It's usually the middle-ish or you still have some room to go. In other words, stocks don't go there to die. The stocks go there and they still run, and they run for many, many, many years in most cases. Not always, but in most cases. So that's one big piece of it. The other big piece of it, I owe this to my friend Jim, who's a big hedge fund manager. He brought up this point to my attention about a year and change ago. Tesla is also a solar company. Remember, they merged with Solar City. So solar stocks have been extremely hot, pardon the pun, over the last 12 months or so, and they're one of the strongest areas in the market. So when you've got a stock that's the EV stocks are very, very hot, and now you've got the solar stocks as well, and you've got two in one, that's really a perfect bullish recipe for these higher prices we're seeing in Tesla over the last 12 months or so.
And Adam, it's interesting. There's even the third part of the company, which is the battery side. I was wondering if you could just sort of illuminate that a little bit as well.
Absolutely. That's a great point. And I bucketed that under EV just because that's part of the EV and solar. But there's no question. Look, if you look at Amazon as a good case study, Amazon started off doing what? They sold books online, right? Very quickly after they started seeing massive success right off the bat with selling books online, Jeff Bezos, the CEO of Amazon, realized, like the visionary co-founder, similar to Elon Musk for Tesla, realized that we can sell our customers other things. So he surveyed, I think it was 1,000 customers or so in the early days of Amazon, said, what else would you buy right now? And the answers came in and they blew him away. One guy said a windshield wiper for his car, because that's what he was shopping for right then and there. The other guy said, I don't know what. The other guy, all just little things around the house and things that you would buy all day, every day. So Bezos, in his visionary or his wisdom, his genius, if you will, for lack of a better word, was able to say, okay, well, we can not just sell books, we can also sell other things as well, like the windshield wipers or clothes or, the whole catalog of items that are available on Amazon, making it, helping propel it to become the largest retailer in the world. So that being said, Amazon, in their infinite ability to continue to innovate and shine on all cylinders, developed AWS, which is Amazon Web Services, which became a cloud-based standalone business within Amazon itself. The Amazon Web Services, AWS, several years ago, grew to become a huge profit center for the company. And it wasn't an accident, it was by design, but nobody at the time when Amazon Web Services first launched ever thought that AWS would be as big as it is.
Mm.
Now, it's a huge piece of Amazon today and a huge piece of their earnings going forward. So Tesla is almost, it reminds me of that parallel where it's doing the same thing with its battery unit, where we know batteries are going to be the future, EVs going to be the future. Not to mean that gasoline cars are going to die and that's it. No, maybe at some point down the road, but I don't see that happening in the next decade or even 2 decades. We have California coming out and saying that they're going to ban sales of gas cars. That doesn't mean that they're going to ban gas cars from being within the state. So, and the rest of the country and the world has to follow. So as long as the EV trend, we're in the early innings of that trend, continues, and I don't really see any reason why it wouldn't continue for many, many years, you've got a situation where batteries are going to be part of that process. And it could, take on a life of its own, just like what happened with AWS when Bezos launched AWS for Amazon. So yeah, to your point, it's a fantastic business in and of itself. It powers, pardon the puns here, but it powers the EV side of the business for Tesla, and it also for the solar and the wind and the other alternative energies. It allows them, the biggest problem with the alternative energies, and I looked into investing in a solar farm about a decade ago, is the ability to store the energy. I mean, right now, where I am today in Florida, it's cloudy outside. In a few hours, it's going to be sunny. Well, okay, when it's sunny for the rest of the day today, the solar farm or the solar, power panels are going to be able to harness that energy. The problem is at nighttime, and every day you get a night at night, the sun goes away. Well, what happens at energy if you can't store it? It's not useless, but it loses a tremendous amount of its value, for lack of a better word. So if you could have a battery to store that energy, oh my goodness. I mean, same thing with the wind power. What happens when it's not windy outside? The windmills, the wind energy stops turning, and so on and so forth. So if you can figure out that bottleneck, if you will, for the alternative energy space, and you can do that with better battery power and a better way of harnessing that power, you're really off to the races here.
Adam, take a step back for us. You have been following this company for a long, long time. You're not, some latecomer to the stock. So tell us how you became a follower of Tesla, somebody who was, looking very seriously here at the stock long before everyone else sort of joined in.
My journey with Tesla began right after they came public. I've done very well in the stock, full disclosure, recommended it for years on and off, and have owned it and own it now and have done exceptionally well with the stock. That being said, and putting that out there, I first really sunk my teeth into it, and it was by mistake back in late 2012 and early 2013. One of my institutional clients, a big institutional firm, came to me and said, hey, I want you to do an analysis or analyze Tesla for me because I want to know whether I should add it to my portfolio and begin buying or not. So I was actually bearish at the time. I said, you know what? The stock had just come public. I love the concept. It's just too early. And I put out a big, huge report. It was, 30, 40 pages at the time. And I gave all the reasons. I did an in-depth dive into Tesla. And at the time, I just said the stock wasn't ready. Well, blink your eyes. I was not only wrong, but I was just dead wrong. And it was almost to the point where I almost lost the account. The good news is with trading, I mean, you're laughing because you understand, right? The good news with trading or investing is it's okay to be wrong. It's part of the game. It's part of the process. Nobody's right 100% of the time. So the key here is to keep those losses small. And the other key that I've learned over the last several decades doing this is when you are wrong, admit it fast. Don't stay wrong. It's one thing to be wrong, and that happens to everybody. It's a whole nother thing to stay wrong. So once I realized that I was wrong with my analysis on Tesla, and this was the end of 2012, the stock hadn't really started taking off yet. It was still hemorrhaging money, and there was concerns, and the stock was nowhere near the behemoth it is today. The market cap was much smaller. It was just a whole different dynamic. And even the customers, the adoption wasn't as ready. The Model 3, the cheaper version of Tesla, wasn't even around yet, so on and so forth. So the infrastructure wasn't built out, all the charging stations, I can go on and on. But at the time, in 2012, for whatever reasons, my analysis concluded that we're just not ready for it in the mass market on Main Street. So I was bearish. The good news, though, the good side of the story here is I quickly admitted that I was wrong when the stock started blasting off in early 13, And I saved the account because I sent them an even longer note saying, hey, everything I just said was wrong, and here are the reasons why. And that's the beauty of this business. It's nothing, everyone's going to be wrong. But when you recognize you're wrong and you quickly adjust, and then I turned bullish in early 13, and really the rest has been history. So I've been on and off bullish since 13. And that was the real story of how I got involved with Tesla. And then over the years, I've had, people in my circle, friends, and so on and so forth. I've been invited to certain events. We've driven them at the early stage of the autopilot, of the driving, which, by the way, I don't know, Jeff, let me share the story with you. That when they first started doing the auto drive, the autopilot in the car, when you drive a cruise control on any car, if you push the brakes, you take it off cruise control and you manually back in control, right?
Yes.
So what happens with the autopilot on Tesla, it's the same concept. They want to make sure you're awake. So the steering wheel, you have to hold it, adjust every few minutes. But if you want to override it and manually take it over, you push the brakes. So I first got in the car. This was years ago when the autopilot first launched. And the guy next to me was like, okay, here's how you do it. He shows me how to do it. Okay, great. And he owned the car at the time. It was the Model X when it first came out, the autopilot in the Model X's. And he said, okay, Adam, we're in a small, empty street. It was on the actual street now. There's a traffic light, red light, maybe about a mile down the road. And it's a 2-lane street. So it's a nice, quiet street. There's no big deal. It's quiet. There's maybe 2 or 3 cars on the road. It was in the afternoon on a sunny day. So everything was fine. Jeff, if I tell you I took over control 5 times in that 1-mile stretch, I'm not exaggerating. It is the most bizarre. I don't want to crash the guy's car, number one. Number two, it's just surreal. I mean, the car's driving you, not the other way around. And, I learned how to drive stick when I first started driving, so I'm an older kind of guy, and all that kind of fun stuff. I'm not a car junkie, but, I was just like, oh, my goodness, what's happening here? So he's like, hey, we're just going downtown. So it's a 20-minute drive to downtown. The car actually took me after the red light. He's like, just stop and just relax. Let the car do its thing. Don't worry. If you crash it, it's my car. I'll pay for it. Don't worry about it. I said, okay. I want that on tape as long as we get that rider, right? I don't want to crash a $100,000 car because it's not even my fault. It's the autopilot's fault, right? So the car takes us. We go on the highway. We jump on the highway. We drive 20 minutes. It not swerves, but it's able to move lanes and go all the way to downtown. We got to the office and we parked, and the car did the whole thing. It blew my mind. And that was, several years ago. And once you taste something, Jeff, as you know, or you experience it, it takes on a whole nother life in itself. So think about this. I'll give every reader here, I'll give you too, Jeff, $1 million cash. No joke. If you can tell me what the color blue looks like with exact, precise definition, or even better, what does chocolate taste like? I'll pause. There's no way to explain certain things in life. There's qualities of life that you have to experience. But I guarantee you, once you taste chocolate, I can't give you vanilla or I can't give you strawberry ice cream and say this is chocolate ice cream. It's not, but you have to experience it. Same thing with blue. If you see blue and I show you, this and say this is blue, when it's black or gray, for sure it's not blue, but you have to taste it to experience it. So same thing here. Once I was able to sit there and taste it and experience it, I said, not just the autopilot, by the way, the car itself. I just said, this is it. This is the future. And look at the younger kids, the younger generations, millennials, and even the younger generations now. Everybody, their car is a Tesla. It used to be a Ferrari or, whatever the Lamborghini, whatever it was. Now it's a Tesla. So, and it's available at lower price points. So for all those, I probably went too long here. For all those reasons, that's what helped me turn super bullish on Tesla for the last several years.
And so then when we look forward here, all right, number one, it's interesting. And Tesla is a profitable company. I looked up the earnings projections for them for the next number of years. Expectations of $2.41 a share this year, rising to more than $4 a share next year, $5.59 in 2022, $6 in 2023. $7.88 in 2024, which is phenomenal.
Yes.
And this goes to the whole point you were saying about this sort of phase where they were building the infrastructure and had various cash things they need to overcome. Building out a fully formed corporation, which is expensive and cash consuming. So the earnings are great. The thing I always read about is, well, that's about carbon credits, and not to get all wonky on this, but the business of selling carbon credits, which big industrial companies and the big other older legacy car companies use to offset the carbon intensive side of their operations. They will go and buy these carbon credits for sale from Tesla. So that's the thing that the short sellers and others will always knock about the company. So set us right about that, as far as what are they not getting about the corporation, in addition to what you've already said here, as far as there are things with the Tesla that the big car companies just have not and probably will never be able to copy.
In my view, it's one word, and the answer is demand. The demand that exists for Tesla vehicles right now, or just EV vehicles, is off the charts. It's almost to the point, I mean, not almost to the point, it is at the point where they can't make enough cars. And not even that. If you look at other automobile companies, they're now starting to come out with their own electric version. I think GM just launched a Hummer, an electric Hummer. And Jaguar, I know I was looking at to get an electric Jaguar, but the Tesla offerings, let's put it that way, are still superior. Now,
Gotcha.
if the other side of it too is that Tesla could be acquired by one of these other companies, I thought that was a no-brainer for the last 5 to 10 years, and I'm surprised, honestly, that none of these other these big global, manufacturing giants didn't just scoop them up when they were much smaller. But I get the reasons why they didn't do that. So for me, yes, carbon credits is obviously a big part of their numbers. Carbon credits, I don't think, are going away anytime soon, because those other guys that are buying those credits, they're still going to continue to produce carbon for their business, and they're still going to want to buy those credits. So the first thing is huge demand, and second is that carbon credits business is still going to be there unless if you have factories go electric, which maybe that could be the next big thing. Who knows?
All right, so let me switch gears here. I still want to talk about EVs, but let's suppose let's move beyond Tesla.
Sure.
If you had to buy or identify, one or two other EV specific stocks that you liked almost as much as Tesla,
yeah.
What would they be? I mean, I read about was it NIO or NEO?
NEO,
and some of those. Kind of illuminate some of that for us on us.
Sure. So I was just this weekend, my family went away with another family to the beach, and we had a beautiful time. Well, two other families. And one of the gentlemen that was with me is a very big banker, and he's talking about EV, and which just happened to be the topic of the day. He owns Model S, which is the higher end Tesla, and he wants to buy an X for his wife. She's got a Range Rover. So he went back and forth, and we're talking about it, and he's made some money trading some of these EV stocks over the last few months. I said to him, listen, he was asking me the same exact question. What would you do? And I said, listen, it all depends on your time frame. First off, there's a few EV stocks that I'm going to mention, and then there's a few EV ETFs. If you don't want to trade individual stocks, there's 3 big ETFs that are EV. ETFs are like mutual funds, but they're traded a little bit differently, but they're very liquid. You've got HAIL, HAIL. You've got DRIV, almost like drive, without the E at the end, DRIV. And then you have iDrive, IDRV. So those are the 3 big ETFs that I follow. There could be more, but those are the 3 ones that I follow. So HAIL, HAIL, that's more for ride sharing and things like that, but still has EV components. DRIV and then IDRV. So those are 3 ETFs, and that's a basket of EV stocks. If you're looking to put that in your portfolio, he's got young kids, I've got young kids, and that's why we went together and the kids would play. And he's like, I said, if you want to buy this for your kid, what would you, he's like, what should I buy? I'm like, well, Tesla's obviously a good one, but other ones, some of them you have to be real careful because they don't even produce cars yet. And they have huge market caps and blah, blah, blah. They're not even producing yet. So let me get into some of the details. That's why I mentioned to him, hey, just buy some of these ETFs because it's a basket. It's a good way to diversify your portfolio within the EV space. Now, my number 1 stock in the group is Tesla. Number 2 right now is Workhorse. WKHS is the ticker there. And again, these aren't buy recommendations or sell recommendations, just for informational and educational purposes. Workhorse Group is a very good company, in my opinion. They do lose money. I do want to put that out there. They're relatively newer, meaning they really started getting going in June of 2020. And the stock has had a huge move. In June of 2020, the stock was trading around $3, and it soared up to 30, almost 31 back in September. And then since then, it pulled back a little bit. And now it's near 21.70. So I think from a risk reward standpoint, you've got a good entry point here, because if it doesn't work, you could sell it below the recent lows if you're an active trader, or you could take out the lows of October, which was near 15, and say, hey, listen, it's just not ready to go. But they do medium trucks, and they do some chassis work. So they have a big deal, I believe, with the post office, the U.S. post office coming soon. To my knowledge, hasn't been fully announced yet. They're still in the process. People are ordering more. So Workhorse would be a really good stock that I'm following, that's offering a good risk-adjusted point. Above $31 to me would be a no-brainer, because it's probably going much, much higher than that. It's just consolidating the huge move. It just went up tenfold. So it's got to pause and digest that move, and that's what it's doing now. The next one would be Nikola, NKLA. I'm not bullish on this stock. You had a big scandal with the CEO stepping down. GM invested a huge stake in the company. To my knowledge, they don't make any cars yet. They do battery electric, and they also do hydrogen electric cars. So they're a little bit a different component than just Tesla without the hydrogen component, but they have no revenue. To me, even if the company loses money for a few years, look at Amazon, look at Tesla, that's okay, providing there's a fundamental story and the thesis is intact, and they've got revenue, or they've got some ability to generate revenue going forward. Yes, Nikola could do that, and I don't want to poo-poo the company. I'm not here to, bullish or bearish. I'm just saying this is a stock that is an EV stock. It's in the headlines. Stock hit $93 back in June. It's now at 19. That should tell you everything you need to know about the company. It could turn around going forward, but to me, there's just too much headline risk in the stock right now, with uncertainty with respect. GM said they're coming into the state company, then they're leaving the company, and then the CEO stepped down. So I don't like it with all that stuff. Plus, they haven't really done anything yet. NIO is the Chinese counterpart to Tesla. They actually produce cars, ticker symbol NIO. And that stock is acting extremely well. Again, had to move from, I think, $3 earlier this year up to about, where was it, 59-ish or 57. Yeah, 57.20 was the high so far. It's now pulling back to the 40s. This stock is extended. I do want to throw that out there. It's had a huge move, but I'd love to see this thing move sideways for a little bit and then blast off again. But he asked me, gun to my head, 5 years from now, is NIO going to be higher? Bearing some unforeseen, events like Nikola, where they've got scandals and, so on and so forth. Right. Yeah, to my knowledge, it's probably going to be, go much higher. I've been to China many times. Pollution is definitely a concern there. Overpopulation is a concern. Transportation is a concern. I know the Chinese government is flush with, they have a lot of capital, a lot of money, and they do want to purify the air in many parts, in many big cities like Beijing and Shanghai and Guangzhou and so on and so forth. So, will they invest in electric? Most likely, it's probably the case, and they don't really produce oil anyway. So this could be a very good way for the a billion plus, I think it's 1.4 billion, 1.3 billion population over there to go electric, and also service the rest of Asia. And then you've got a few other ones. Plug, PLUG, is another ticker that I like. The company there, it's Plug Power, and they're engaged in designing. They manufacture fuel cell systems for industrial, off-road, and stationary power markets all over the world. And again, this stock has had a huge move. So it's not like go buy it right now. I'd like to see these guys pull back a little bit and then take off again. So like I mentioned with you earlier on a different show, I don't buy the dips. I like to buy the bounce after the dip. So I want to see this thing pull back a little bit. It's had a huge run. And then if it can pull back, offer a secondary buy point with a good risk-adjusted entry point, that would be a very good signal for me. But those are some of the stocks that I'm watching in the space.
Adam, as we come up to the last of our time, I'm wondering here about the legacy automakers like General Motors and Ford, and I guess we'd call it Fiat Chrysler as well, even though they're not really an American company anymore. What happens to them as the EV revolution progresses?
So I believe GM announced that it's no longer going to take the stake in Nikola because of all the uncertainty that's going on there that I alluded to earlier. But to your point, Jeff, Ford and GM are definitely here to stay, no question. I mean, there's the stocks have acted it very, very well. I mean, don't take my opinion for it. Just look at Ford stock. Stock was at 396 back in March, the worst of COVID, and now you're at $9. It's tripled since March. GM has gone from 1432 to 44 and change. So these stocks are here to stay. They are aware, and I know this because I do some consulting work for some people in the auto space. The senior management in these companies are well aware that they're losing market share, they're losing sales to people that are going to Tesla and buying electric cars. So what they're doing, and Toyota as well and other companies as well, is they're trying as much as possible to shift their lineup and introduce some electric cars into the lineup. Like I mentioned earlier with Jaguar having their iCar, BMW has it, Mercedes are looking to get in space. And over the next 3 to 5 years, if not 10 years or so, I have to expect every single one of these major car companies to either retool, if you will, and get big in the electric space, and or to start acquiring some of these other companies to really allow them to propel them to go forward. And I think I read in Forbes last week, there's a 25-year-old somewhere here in the U.S. that came out and is going to have a company go public, or just went public in the EV space, but for big trucks. And he's the youngest billionaire, I think, in the last year and change. And he did it by basically inventing a company that's in the EV space for trucks and wanting to go public, raising a bunch of money. So he's one of those unicorn valuation companies. So the trend is here to stay. Those bigger legacy automakers need, in my humble opinion, need to get with the program, so to speak, and adjust. Otherwise, they're going to be left by the wayside. And the one hallmark of every great American company, or every great company in history, has been the ability to innovate and adapt. When things change, they need to change. Clearly, the customers are going, the trend is changing, demand is changing. So I hope that answers the question.
So Adam, run through us just quickly the stocks you're suggesting here as ones that we should look at more seriously. Tesla, and what else? Tesla's
number one. NIO would be number two. Workhorse, WKHS, would be number three. This is no particular order. And then you've got Plug, PLUG. And the ETFs are HAIL, HAIL, Drive, DRIV, and then IDRV. iDrive would be the third ETF in the space. And I've got with WealthPress, Alpha Trades, as you know, Jeff, subscribers, we're going to be moving into that space in the very foreseeable future. I'm just waiting for those setups to come in, those risk-adjusted returns, to be able to offer good windows, if you will, to trade these stocks with the Alpha Trade membership. But I just wanted to throw those out there as far as how to actually play the space. You've got NIO, Workhorse, Tesla, Plug, and then the ETFs, if you want to just buy and hold them, and it's more of a longer-term thing, HAIL, DRIV, and IDRV.
Adam, it has been great to have you on. I appreciate so much you taking the time to illuminate us further about Tesla and the whole EV sector. So thank you.
Thank you.
That's Adam Sarhan of Alpha Trades. And for all of you watching at home, make sure to continue to follow us, like, and subscribe to us. And we'll see you again next week for another edition of WealthPress TV.